Hello, welcome to Save U.S. Taxes Legally. My name is Sally Gimmon, and I'm the owner of thetrustisuU.com and also a free class on the Great Discovery. You go out to www.sallygimmon.com, sallygimmon.com. You will get the same presentation similar to this, 3 articles from Forbes magazine that I did not write, 2 pages of case law, so you can research this to your heart's content. Now, why you need to know about this? This is legal. It's in the IRS Tax Code 643B. It's been in front of the United States Supreme Court on 2 separate occasions. You can't get more legal than this. Now, Paul Benson was a Harvard law professor who 77 years ago wrote 5 different tax shield methods. We're going to talk about the 2 major ones here today. I don't care which tax shield method you use. You will say leave a legacy for future generations. All lawsuits become frivolous. I can't stop you from being sued, but all lawsuits become frivolous, and your information is 100% private. Now, imagine saving 4, 5, 6 figures in taxes every single year. This is your money to put back into your business or back into your investments. This is your money to pay off your mortgage, to buy a new car, a new vehicle, to take your family on a well-deserved vacation, to give to the charity of your choice, or to save for retirement. Imagine no one knows what you own, where you own it, how much you own it, what you do with it, and how much you sell it for. Imagine all lawsuits become frivolous and go away. Doesn't matter which tax shield method you go with, all 5 of them will do this. Now, on this next page, on this next page, this is current 2000, hit the wrong button. Current 2025 tax brackets. They made a change on January 1st. Check out married filing separately over here in this column versus single. They are exactly the same all the way up to the 37th percentile, the most expensive way to file your taxes. Then you have head of household. Then you have married filing jointly. Get nothing else from this presentation. If you're married, please file jointly, because now the married filing separately is the most expensive way to file your taxes. Now, I want you to research this as much as you can. The IRS tax code this is under is 643B, like Bravo. When you do Google tax code 643B, you will find an opinion letter dated September 11th, 2018 from the IRS. It's their opinion. They literally say they do not like tax code 643B. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. It's their opinion. My opinion is I don't like lima beans. You don't care. Maybe you love lima beans. But the only people who can change the tax code is Congress. President Trump's father started this trust. Other presidents have it. Senators have it. Congress people have the trust. They know the secret of the rich. You're learning the secret of the rich. The only thing that Congress is doing is raising taxes. They're not going to change IRS tax code 643B. Let's go over these 5 elements. You do need these to make this work. Irrevocable. This goes from generation to generation to generation. The Rockefellers tax shield method is called the office. It's been around for 7 generations. And there's over 400 people under the same EIN, or employee identification number. Each different family or person files their own taxes, a 1041 tax return, not a 1040 tax return. So it does not affect your personal taxes. One question I get a lot is it difficult to get things into an irrevocable trust? It is not. We have an entire team that works with you to make sure it goes well. Second element you need, complex. This trust holds money day to day, week to week, month to month, year to year, decade to decade, century to century. 97% of the trusts sold in the United States are what my mom and dad had and what Susie Orman talks about on PBS television, the family trust or the living trust. There's nothing wrong with the family trust. It is designed to avoid probate and then it dissolves. My mom and dad started their trust. When they both passed away, the trust dissolved, all the assets had to be divided. Third element is discretionary. Whoever is a trustee or trustees can make the rules for the beneficiaries now and also from the grave. I have a husband and wife who have a trust. They have 4 apartment buildings in Los Angeles. Their adult daughter who has a problem, they're requiring her to do 4 random drug tests to live in one of the apartments rent free. She took her parents to federal court to sue them. The judge looked over everything and he said that she had 2 different choices to make: either pass the drug test and stay living rent free, or move out and start paying her own rent on an apartment or a house. She was not happy. Discretionary. That's discretionary. Also, you get to make the rules for everybody. Non-grantor. This is a major change from the family trust. When my mom and dad started their family trust, my mom and dad were the grantors or the settlers, and when they both pass away, that trust dissolved. This, when you start, you will have someone who is not a beneficiary or will be a beneficiary, or someone who's a trustee sign up to be the grantor or the settler, and then they will sign themselves away. This makes the trust 100% private and no one knows what's going on. And the fifth element, spendthrift, has been in front of the United States Supreme Court on 2 separate occasions, and both times it's been favored. You cannot get more legal than this. Now, my personal story, in 2019, with my mentor, Jay Tannenbaum, I wholesaled 7 properties nationwide and paid off $184,000 in debt. I had $50,000 sitting in my bank account for pay for short-term capital gains. I had 4 notes at the time, and on April 1st of 2020, 3 of my notes did not pay me. I was in a money crunch. April 4th of 2020, my CPA called me to say I did so well in 2019. My tax bracket went from 22% to 24%. Let's go back to this. So I'm single. It went from 22% to 24%, and I all of a sudden owed the federal government $94,000 I did not have. My solution was to take a HELOC off of my paid off house. Defeats the purpose of being completely debt free when you have to take out a HELOC. I paid my bill and I started researching the Rockefellers office because I want to know, if the Rockefellers could save taxes, why couldn't I save taxes? This is my first property in the trust. I bought it for $20,000. It was supposed to go auction for $50,000. I knew the spread, that $30,000 in between that I would make on this at 24% tax rate would be $7,110. Well, when it finally did go to auction, August 28th of 2021, it started at $50,000 and went all the way up to $64,326. Woohoo! Without lifting a hammer, Sally Gimmon got to save $44,326, or make $44,326. At 24% tax rate, I was able to save $10,368 with the Beneficial TaxShield Method. The Beneficial TaxShield Method are going to save the following 5 taxes: short-term capital gains that are just like federal income taxes, and long-term capital gains that are a year or more, which are either 15% or 20%. So if you're selling your business, you're selling an investment property, or a baseball card, that'd be long-term capital gains. You're going to save interest income taxes. If you're a passive investor, if you're doing subject to real estate, the BRRRR strategy, my notes that I have are interest income taxes. Creative financing, seller financing, or you're a Forex investor. You're going to save dividend income taxes if you're in the stock market, a day trader, an options trader, futures trader, or doing commodities. You're going to save rental income taxes. So if you have Airbnbs, vacation rentals, 3 doors, 5 doors, 10 doors, 20 doors, maybe you have commercial property, you have apartment buildings, multifamily, or you're doing Airbnb arbitrage. Yes, you can move a property that is on a depreciation schedule into the trust. And yes, you can put a property that has cost averaging into the trust. Remember, you're going to save all lawsuits become frivolous. I can't stop you from being sued, but if the renter's dog gets out, bites the mailman, they can't come after you. That's why several of my people have done this. And everything after that, you don't have to worry about cost averaging or depreciation schedules, because you no longer will pay rental income taxes. And finally, royalty income taxes. If you are, whoops, this is a short video. If you are in NFT world, If you are an author, an actor, an actress, a musician, you're an artist, you are you're going to be the copyrights, patents, or intellectual property. Now the business trust, I don't have a slide for the business trust, but coming back up here, the business trust is for all business owners, entrepreneurs, franchisee owners, and 1099 income earners. I cannot help W-2 income earners because taxes are taken out before you get your paycheck. But you will save at least 90% on your federal income taxes, and then 43 states no longer pay state income taxes. It's an amazing thing. To give you an idea, I recently helped a family. She has a dental practice. Her husband's in charge of a high-rise building in Chicago. He's a W-2 income earner. We took the dental practice out of their personal taxes and put it into the business trust. She's going to save over $60,000 a year doing that. Her husband's $90,000 a year job goes from 24% tax rate down to 12% tax bracket, save another more money. So they're going to save over $88,000 per year. More importantly, they just started this in March, so they will save over $7,000 per year, not working harder, not working longer, but because they have the trust. She's so excited because they have 4 children, and that she's going to start putting that $7,000 a month into college funds for her 4 children. That's her decision. Now, if you would like to set up a 30-minute tax breakthrough session with me, you're going to go out to www.trustisyou.com/scheduling, or my free class is my first name and my last name squished together on the Great Discovery. I'm going to stop the recording now. Let me stop that.